So I just checked my credit score yesterday and I saw it was an 814, which makes me super excited. It was sitting at a 799 for like, I don't know, a month or a couple months or something. But I had a bunch of loans out, I've been paying them down, and then I saw yesterday it jumped up to 814. But it was weird because I don't know, when you pay loans off, sometimes it seems like they'll make your credit score go down. But anyway, that's the score I have with FICO, and when that one went up to 814, the other one that I look at, I forget what it is, but that one went down actually for some reason. And before it was the opposite. The other one went up, and then my FICO went down. So I didn't know if it was going to go over 800, but it did, and I'm super stoked on that. And basically the way I did it was, first of all, I'm older than I look. I'm 36 years old, so I think that it takes a lot of time. So somebody said I was 20. He thought looked like I was 22 in another one of my videos. So don't think that I'm 22 and I just did it like that. I'm 36 years old, and a few things that that helped me get it up that high. And one big thing was the fact that I have out loans. I took out loans to go to college. So I have a lot of student loan debt, and I've been paying those for over 10 years. So one thing that'll help your score is if you have very old loans. They like to see that for some reason. You would think if you take out loans and just pay them all off really early, that would kind of help. But I don't know, having like the really aged loans seems to help a lot. That's why, like, if you have a house or something like that, student loans, it can help your credit score a lot. Another thing is when I was very young, like 20, I took out a credit card and was irresponsible with it. I racked up like a few thousand, couple grand, or up to $5,000 of debt or something. Took me a while to pay it off, but I never made a single late payment. I always made the minimum payments on it. And the same with my student loans. I've never made a late payment, at least none that were late enough so that they got reported to the credit bureau, or however you say it. I don't know, but basically you can make late payments, but they have to be very late before it actually gets reported to the credit bureau. I guess I've also had like phone service I've been paying for a long time. PG&E, stuff like that helps too. But the main thing that kicked it up really high, because I think I just had sort of a normal score or a decent score for a long time. But what made it go really high was I started like a small rental car business, and I started taking loans out for the business eventually. After I learned what I was doing, I did start it with cash. At first I was very scared of loans because of the student loan thing. Like, I still have a ton of debt with that. It's a freaking nightmare. I pay close to $700 a month. And then because of the credit cards, I was very afraid of debt. But actually did end up taking out a credit card too, eventually, because if you're responsible with it, there are many benefits to using a credit card. Now, the main one being the rewards that you can get. You can get like 2%, probably some have even better rewards, or everything you're spending, you're getting 2% back from that, which really adds up. But let me talk about like the loans I got out and how it made my score go up. So basically, to get a high credit score, you have to buy a lot of stuff on credit, on loans, and you have to pay them off, and that's what makes the score go up. So eventually, after I've been doing the business for like a couple of years, I started out and I got one small loan, a personal cash loan. It's very hard to get business loans at first. Like, the business has to be at least 2 years old. They usually want to see a lot of money come in. Your business credit score is separate from your personal one. Your personal credit score, you do need a high one to get business loans as well, because they take that into a factor. They look at that too. But still, the business score is different, and getting loans for that can be harder and different. So took out a personal loan. It was like a cash loan for 11 grand. And then I took out a car loan. It was like a normal auto loan. And I think one thing that helped it too was the car loan got refinanced. And it seems like it makes the score go up when you refinance a loan, because the credit bureau or whatever, it gets reported as the loan being paid off, even though it sort of isn't. You still have the same amount of debt, and hopefully it's with a better interest rate, so it can end up being a bit less in the long run, which is good. But basically, you're just keeping the same amount of debt. You're just transferring who you're borrowing it from. but it seems like that makes your credit score go up. And when I got my student loans refinanced once too, and it seemed like that also made my credit score go up, which I think is one of the things that helped me get the loans for my business and everything. But then after the auto one, I took out 2 more personal loans. One of the personal loans I paid off very quickly in just like 2 or 3 months or something. And the one auto loan I had, I only had that car for like a year, so I paid that loan off when I sold the car. And then I recently quit my business, so the other 2 loans that I had out, I paid those off as well. And I didn't have any of those loans for more than like 2 years, I don't think. So I paid them all off. They were all 5-year loans, I think. So I paid them all off really quick. So I was excited because I was hoping that my score would go up when I paid them off. But it was kind of weird, like I was saying, they've been bouncing and going up and down. And I'm not really sure why I did that, but finally the one went up over 800, and I'm super stoked for that, especially since I'm starting up sort of a new business now, and I definitely don't know what I'm doing well enough yet to use loans, but hopefully in the future I want to be able to use loans to buy like online businesses, like online blog type of sites. This video is like very unscripted. I thought of something to say in the middle of it and then forgot. But I wanted to give people a bit of advice on how to get loans, because I was surprised on like how much loans the bank that my credit union let me took out. I was like really surprised, because based on my income and the amount of debt I already had, I think they were like stupid to let me take that much loans out, to be honest. But I think maybe part of it was because it was like during that kind of car boom when everybody was giving out a lot more loans, when the prices of cars were really high, it was easier to get loans and the interest rates were really low. Now I think it's harder. But I think one of the big reasons is because I was using a credit union, and I've been using them for a while, and it seemed like to me that the credit union, they kind of look at you if you're a longer term customer, and they take that into account. Also, I was using that account as my personal account at the time for my business account. So I think this is the main thing, is they just saw that I had a lot of cash coming into that account every month. So they're like, well, obviously he can pay for this. And that was another thing. Once I opened up the business account, I had that account for a little bit. When I applied for the loan there, they were asking me about my income. And when you kind of have your own business, a tip is you can actually put that you're employed. Like you can, because a lot of time they want you to be employed. They don't like the self-employment income as much when you're getting loans. So you can put on applications you're employed, and then put the name of your own business as the employer. And I believe that was what I did. And the guy was asking me for my income, and like I had all the money coming into that account in the it was another, what's it called, it was another credit union. I had all my money going into that account, and they asked me for like pay stubs, and I was like, well, I don't have pay stubs because it's like my own business. And I thought they weren't going to give me the loan. And then like a half an hour later, he just texted me. He was like, you're approved, and they just put it in my account the same day, which I was surprised. But that is like one key tip. If you just have the money coming into your account and they can see that, at least with smaller like credit unions, they'll take that into account, and they're much more likely to give you loans out. And I like I was saying, I was really surprised at how much loans that they would give me. I think when I took that loan out, I'd already had a loan for 11 grand out, a personal loan, and I had another one out for 20 grand that I'd only had out for like a year or something. And I think the auto loan maybe I've gotten rid of by then, but just the amount of loans they gave me I thought was insane. And I already have all this debt out for the student loans as well. So those are just some tips to help you get loans out if you're looking to get financing. But you know, I wouldn't recommend financing really anything unless it's for a business, or like a home makes sense, because if you don't have a home, you're probably paying monthly anyway for an apartment. But even a car, it doesn't make a lot of sense to me. I really just don't recommend financing anything unless you're buying assets with you and they're going to make you more money in the future. But you do really want to know what you're doing with the particular business, and, and you know what you're doing before you do that, because you don't want to end up getting a bunch of loans and then going bankrupt or not being able to pay them because the business fails.